Hello and welcome to the Banker's Tech Talk video series, now in its 5th year of tracking fintechs. You can watch all previous episodes on thebanker.com/techtalks. I'm Joy Macknight, Managing Editor at The Banker, and my guest this week is Rachel Woolley, Global Anti-Money Laundering Manager at Fenergo, a regtech firm. Rachel, thanks so much for joining me today.
Hi, Joy. Thank you for having us.
So recently you did some research into some of the challenges banks face in compliance. What were your main findings?
So we've published research this year. We've looked at essentially all of the financial crime, anti-money laundering, sanctions-related fines that were issued to financial institutions. And that dates back to 2008. So essentially the hallmark date of when the financial crisis started to kick in. We'd initially published a set of research in 2018. And at that point, the total fines had reached 26 billion. And in the 15 months since that publication went live and the new publication was published, we had an additional 10 billion in fines that were issued in anti-money laundering, KYC, sanctions related fines. So the cost of compliance is continuing to escalate, not least related to the fines that are being imposed, but obviously the challenges that financial institutions are facing in terms of avoiding those fines.
Okay, so can we drill down a little bit into really what are the biggest challenges banks face when they're trying to adhere to the AML regulations?
Sure, absolutely. So there's a lot of stages, I suppose, in the anti-money laundering process. And really, I suppose, what is really important is to make sure that banks are focusing on each of those areas and making sure that their processes, their policies, etc., are standing up to those challenges. One of the main findings from the publication is that banks are continuing to fall short of the expectations for AML and KYC compliance. And interestingly, actually, some of the fines that were issued in the last 12 to 15 months or so related to insufficient training as well. So really, I suppose financial institutions and regulators alike need to work a little bit closer, collaborate a bit more to make sure that not only are expectations being met, but also that the effectiveness of the approach to AML compliance is being met and understood fully.
Okay. But then how do you think banks can really rise to this challenge? What do you think they should be doing in addition to the suggestion you just made?
So I think we're continuing to see the same types of penalties being issued, certainly for the same reason. So it continues to be insufficient policies, ineffective policies, which is obviously important as well to ensure that not only is the policy in place being followed, but also that it's effective. So looking more towards an outcomes-based approach rather than a prescriptive rules approach. I think some of the challenges that financial institutions have faced previously is that they're almost taking a checkbox approach or checklist approach to compliance, which ultimately satisfies the regulatory expectations, but doesn't necessarily address the risk of financial crime. And I think part of the issue is that a lot of the time what happens is financial institutions will focus on putting more resources into complying with these requirements rather than really taking a whole holistic view of the systems and operations that are in place. We've seen obviously a lot of technology has emerged over the last number of years, and really I suppose it's important to understand how technology can actually support that process, which is I think where financial institutions will find can really I suppose start to develop those processes and policies and make sure that they're actually standing up to scrutiny, but also detecting and preventing financial crime.
So let's talk a little bit about Fenergo. So how does the company actually help banks address AML and KYC compliance?
We're looking primarily at the client lifecycle management journey. So part of the process of the onboarding, I suppose, or the initial onboarding of customers, looking at the risks that are presented by those customers and determining ultimately what factors can be put in place, what measures can be put in place to mitigate those risks and ensure that financial institutions truly understand or know your customer. So KYC obviously is one of the common acronyms that we hear, and truly knowing your customer throughout the life cycle of that relationship that you have with them is key to AML compliance. So Fenergo ultimately has an out-of-the-box, really robust product that allows financial institutions to fully address all of the various stages of the onboarding process and also throughout the life cycle of that relationship. So from the onboarding piece to the ongoing monitoring piece, which is also important, and ultimately through to offboarding.
Okay, great. Well, thank you so much for your insights, Rachel.
Thank you very much.